you're looking to borrow some money, whether that be for a new car, home improvements, or even to consolidate your debt, you've probably been bombarded with 101 different loan options, all with their own terms and conditions. And with so much choice, finding the right option can sometimes feel impossible. Well, if you're in this situation, you've come to the right place, because in this video, we're going to compare two of the most common types of loans, secured and unsecured. And by the end, you'll have a better understanding of which type of loan is right for you. So, let's first break down the main differences. Secured loans are like borrowing money with a safety net, for the lender, that is. You offer something valuable as collateral, often your home or car. This reduces the risk for the lender and could allow you to borrow more than you would through an unsecured loan. You may also get a more competitive rate of interest, but if you cannot pay the money on time, you could lose your asset altogether. On the flip side, unsecured loans are more like borrowing on trust, and you don't need to offer any collateral. This makes lending money more risky for the lender, which usually means lower borrowing limits and potentially less competitive interest rates. So, what are the key differences between secured and unsecured loans? 1. Depending on the value of the asset you're borrowing against, you may be able to borrow substantially more than you would with an unsecured loan. Many secured lenders provide loans of £25,000 or more. 2. Interest rates. Secured loans often have more competitive interest rates than unsecured loans, but much will depend on your personal credit rating. But unsecured loans can be competitive if you have a good credit score. 3. Repayment terms. Secured loans can stretch up to 35 years, while unsecured loans are usually 1 to 7 years. 4. Risk. With secured loans, your asset is at risk. With unsecured borrowing, your credit score will take the hit if you default. Now, before you decide on which loan is right for you, it's important to think about your current financial situation. Be realistic about how much you need to borrow and for how long. Consider whether you have any valuable assets you could offer as collateral and how healthy your credit score is. These factors will help determine which type of loan is best for you. With that said, let's take a look at the most common uses for each type of loan. Secured loans are often used for buying a property, that's your mortgage, major home improvements, and debt consolidation. Unsecured loans are popular for smaller home improvements or repairs, buying a car, debt consolidation for smaller amounts, and short-term borrowing needs. Ultimately, taking out a loan of any kind, secured or unsecured, is a significant financial decision, so it's important to do your research and find the best rates. Read any terms carefully and make sure you can afford the monthly repayments.